You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live every Friday at 1:30 p.m. Central, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by QuickStrike, options pricing and analysis software. QuickStrike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. QuickStrike has you covered with market data reports ranging from open interest to the term structure of volatility. QuickStrike is the perfect addition to your trading toolkit. Learn more about QuickStrike at bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it's time once again for TWIFO, This Week in Futures Options, the program that wraps up our broadcast week here on the old network and breaks down all of the exciting, the interesting, the unusual stuff going on over there in the futures options side of the fence. Maybe we're going to talk crude, maybe indices, maybe ags. You never know what's going to make it on the show. That's why you got to tune in every week. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. We were on hiatus last week for the big options industry conference, but now we're back. I know a lot of you guys are missing us, so don't worry. You get your TWIFO fix this week. You guys know how to get it, by the way. If you want to go deep into the archives, theoptionsinsider.com or the app are the places to go. If you want to just subscribe and have it delivered to your device of choice every week, then go to your platform of choice, iTunes, TuneIn, Stitcher. I like a good Pocket Cast, but to each their own. Or, of course, you can join us live every Friday at 1:30 p.m. Central, 2:30 p.m. Eastern via Mixlr, MIXLR, and you can get the show hot into your ear holes as soon as it is created. Of course, however you listen, live after the fact, hit us up. Questions, comments, insights, pearls of wisdom, you know how to hit us up. And of course, we do like to hear from you guys. And joining me on the old program, it's been a while since I've chatted with him. Good to have him back. The founder of Bantix Technologies and creator of a little platform we like to use around here once or twice called Quick Strike. Mr. Nick Howard. Nick, welcome back to the show. I understand that we were both in Florida, but on separate coasts. Is that correct, sir?
That's right. We were on the beautiful Gulf side. It was nice to be out there. And one thing that we didn't really pay much attention to the last time we were on, but it came out. I don't know if anybody saw or recognized the fact, but our last show was our 100th show. So
I know.
I'm in talks selling the show to TBS or Lifetime or something like that.
Syndication is big, I hear, for these shows. Yeah, fun. A lot of people pointed that out to me after the show, and I completely missed it. We were too busy doing the show and doing other stuff and getting ready for the big conference. It completely went over my head. So we'll have to do like something silly like The Simpsons, like maybe like 105th episode spectacular, something like that. A little bit of an off-cycle anniversary. But you're right. A lot of people were hitting us up saying, "Oh, Trifo 100, why didn't you do it?" And I was like, "Oh, I literally didn't know until I saw the numbers." So there you go. You guys are on top of it more than us. Thanks to everybody who reminded me of that fact. And I'm also pleased to be joined here in studio by an old friend of the show. He's going to be back on. He's going to be joining us on a regular basis going forward, I'm glad to say. He is Sean Smith, the Managing Director of Derivatives Licensing over there at FTSE Russell. Sean, welcome back to the show, sir. It has been too long.
Mark, thanks for having me back. It's really good to be here.
Well, I've seen you around at a bunch of different events and things, so I know you've been working hard behind the scenes over there at Russell when you're not talking to us here, working on a lot of cool things, a lot of great initiatives. Maybe let's start there before we dive into all things E-mini, Russell, and the options there. What have you been working on? Catch us up. What are some of the new things coming out of Russell these days?
Well, as you know, FTSE Russell is a global index provider. There's over $15 trillion benchmarked to our products globally. We are now a multi-asset index providing firm. We acquired Citi's index business along with their yield book, which is their analytical tool for fixed income products. It's a very, very exciting diversification for us into the fixed income space. So look to see fixed income being a direction that FTSE Russell goes in. And we're global. You know, we're wholly owned by the London Stock Exchange Group, which is London-based. We're here in Chicago, we're in New York, we're in Asia, and several locations. Very exciting. Not only did we diversify into fixed income, but we also acquired a data service provider named Mergent, another company. So our data solutions capabilities have just expanded exponentially. So we're very excited about that. So we're multi-asset. We've expanded greatly in the data service business as well. So things are happening.
I know you're scaring me, Sean, because I know for a while here, Nick's an old school Eurodollars guy, so he's been trying to lure me to the dark side of rates for a while without much success. Now here you're talking about adding in all the fixed income. So I think between the two of you, I'm smelling a conspiracy here to drag me to the dark side of rates. Is that what you're going to be doing here on the show now? Just all rates all the time?
I don't think there's anything dark about rates. Nick, do you want to comment there?
It's all dark side.
Yeah, well, you got to be careful. You have to tread lightly on rates. You do. But once you're over there, it's hard to go back because everything's in round, nice numbers. Everything, well, at least on the short-term interest rates, everything's in things that you can add and easily. So that's why I like it. The Treasury stuff, I know it's popular, but it's hard to add up.
It takes a lot to put a twinkle in Nick's eye. Whenever you start talking rates or Eurodollar, you see that little twinkle light up for the old school Eurodollar guy. So I have a feeling between the two of you, you'll be conspiring to lure me to the dark side forthwith. Well, let's start in the only, let's say, medium dark side, which is the equity space. Of course, you guys have been doing a lot in that world. That's been a lot of our focus when you've been coming on the show in the past. In particular, how long has it been now, Sean, since the big migration over to the CME of the E-mini and all the Russell kind of equities products? Has it been about 6 months or?
This summer is going to be the year anniversary.
Wow.
It's going to be 1 year in July, and we're very excited for that. So look for some excitement coming out of the CME in regards to that, our very important partner.
Maybe we'll plan our 105th episode spectacular around that. There we go. See, that's a good landmark to benchmark ourselves around because we miss our own anniversaries, so we might as well celebrate someone else's and rope that into the show as well. But how are things going on the equity index side since last time you and I talked? I know that's been a big focus for you and your team here in Chicago in particular.
Fantastic. As you know, there's a small cap focus here in the States in a big way, and small caps have been outperforming some of the other major benchmarks. So we're very excited about that. As you look at volume and open interest at the CME, it continues to grow. The number of clients trading the product continues to grow. The global reach of the product continues to grow. CME is hitting this on all cylinders, and it's very exciting to see. On the CBOE side, we have the same excitement going on. Volumes and open interest are strong. They're fantastic products. There's good liquidity. We're very excited about the Russell products on both exchanges today.
Yeah, it has been an interesting one to watch. And one I've talked about before with you, I find it interesting, particularly in this environment where people are looking for alternative ways to trade volatility. Maybe for whatever reason, these days, again, as we're talking, VIX is quite anemic, shall we say, yet again. So we're not quite where we were in 2017, where everyone was saying, oh my goodness, single-digit VIX, what am I going to do? Oh, woe was me. We're not quite there yet, but we're in the low teens again, which is, again, I think they've been coming for vol quite aggressively. It is May, so it is that time of year where historically they tend to, I won't say the old cliche, but they tend to like to dump a lot of vol and do something else for a few months. So we're seeing some of that, of course, playing out in the marketplace, and is seeing it playing out here in the Russell as well. By the way, listeners, you guys can play along with all of us here on the show, cmegroup.com/TWIFO, TWIFO. That gets you all the reports that Nick and I and Sean will be looking at throughout the show. So you too can play along. If you listen after the fact on the podcast, of course, make sure you change those expiration settings so you can see what we're talking about here on Friday as we're going through this. And as you might imagine, it's kind of rally ho day out there in a lot of the indices, including here in the Russell 2000, as the small stocks, small caps getting a lot of love out here. As you kind of mentioned it too, Sean, it's kind of an interesting fact about the small caps because everyone out there in the broad equity indices is worried about macro things and about Middle East tensions and all these other things, perhaps, filtering back into the index where if you're looking at Russell, I wouldn't say you're immune from that because nothing is immune, but shall we say you're a little bit more insulated? Is that an attractive thing? You see if a lot of people come into the Russell?
Absolutely. I think you nailed it right there, Mark. It's absolutely true. You're very accurate.
Well, I've been known to hit one or two out of the park every now and then. And also on the flip side of that, also as a result, because there's smaller names in the index, a little bit structurally more volatile. So if you're people out there looking for volatility, that's an interesting place to look. Maybe not today because it's coming off pretty hard as we're talking, but that's kind of the case across the board in all of the indices these days. E-mini Russell's up about 35 handles. So we're seeing the vol coming in pretty much as you might expect across the board, a point and a half, 2 points, depending on where you're looking on the term structure out here. So a good little drubbing. But again, we kind of debating this on our last show as well. The volatility views, is this maybe a little bit over aggressive or is it suitable given the environment we're in? That's, of course, up to the end user at the end of the day. But a lot of interesting stuff going on out here in Russell. Nick, we talked a lot in the past, and I think one of the interesting things I know a lot of our audience likes when they're talking things Russell are disparities. They like to see how the vol is lining up versus the S&P, and they also like to see how the skew is lining up versus the S&P. So we focus on that a lot, and that's driven a lot of paper in the Russell in the past when we're seeing those kind of disparities. Obviously, it's still going to have an index bias kind of skew like the S&P, but the slope's going to be a little bit different because, like we mentioned, it is small cap, so it's a little bit of a different beast. Nick, have you noticed any interesting changes or aberrations out there in Russell 2000 skew land since the last time we all gathered together? Maybe something that would intrigue our E-mini S&P options traders?
Well, I will tell you, I think there's been a general change in the shape of the curve for both the E-mini and the Russell. If you look at sort of right now, I'm looking at the 34 and change days to expiration June contract, and probably the last time we had Sean on, or just in general, it seemed like it was more of a slash from the top left down to the bottom right, a straight sort of like a saber slash without much lift into the upside call section of the curve. But when you look at the vol curves right now, the vol by strike, we have lower volatilities as we move higher in the futures, but we're seeing some curvature up as we approach some of the 20, 15, and 10 delta. We'll probably start to see some change in convexity of the vol curve around the 15 delta. So we weren't seeing so much of that lift before, but we're seeing a little bit more bid on the upside than we have in the past. As far as again, I think that we're probably seeing very similar to what we saw before. The skew actually looks a lot closer now. We talked about it early on when Russell first came on and said we're going to have to wait and see what happened once that market was a little bit more mature on the CME. But if you start to look at the quick skews, you're seeing that the numbers really are lining up between the Russell and the S&P, with maybe the S&P's getting a little bit more bid, but not that much more bid on the downside, and maybe a little more offered the Russell is on the upside than the S&P is. So a little bit more lilt in the curve on the right side of the smile if you're staring at the screen, and not quite that sort of just continual trail off on the upside. So maybe that has something to do with some 1x2 call plays that are taking place out there. But typically the play in the index is to buy one and sell two, but this doesn't necessarily, and I think that might be where they're buying one at the money and selling 225 delta, but maybe there's some hedging going on outside the 25 delta down in the 15 and the 10 delta range to cover some of those plays that are usually taking place in the indexes to sell two to catch some of the rally, but get the benefit of some of the decay on the upside. So that's what it looks like right now.
Yeah, it's always fascinating to discuss skew in other products, because that's kind of where a lot of people, I've seen this before, when people like to light up, and there's a lot of trade going back and forth between these two when they do start seeing some disparities out there in skew. And speaking of lighting it up, in terms of what was number one out here with the bullet this week, we're seeing the E-mini Russell 2000 heading up right to about 1,600 as we're doing the old show right now, a little bit north of that right now. So you might be saying to yourself, well, I think maybe those at-the-money calls, or right today at-the-money calls, might be lighting it up. And actually, you being correct, looks like the week 3, 1,500 puts that were leading the charge this week, with about close to 500 contracts going up. Lion's share actually kind of evenly split, actually, a little bit more on Wednesday, and some more, about a couple hundred going up on Monday, and not so much throughout. Looks like actually might have been some verticals now that I see these line up. Looks like the 1,400, 1,500 put spreads going up on Monday and Wednesday. Exactly equal numbers on Wednesday, which is kind of interesting. So if you're saying yourself 1,500 puts, it actually looks like a bit of a put vertical out there, 100 handle put vertical out there. So people out there perhaps not buying this rally, or perhaps concerned against it and want to hedge themselves accordingly. But it's the case, and Sean, you probably can speak to this too. We see this. We haven't seen this, quite frankly, a lot with a lot of the commodity products. So for whatever reason, and looks like the E-mini Russells are in the same camp, the equity indices, the weeklies, are just where the action is. I mean, that's where so much of the clientele has gravitated. Sounds like you're seeing similar stuff out there in Russell land as well. Why do you think the weeklies are so attractive, particularly to that equity option trader versus, let's say, WTI, where they still have yet to catch hold?
Basic option theory, the Greeks all decay the fastest right before expiration. So, you get that, you get those Greeks moving in decay, acceleration, option moves. It's all that last week prior to expiration in historical options trading, right? So having weeklies is really appealing to that trading community. So
you're saying we have a bunch of degenerate premium sellers out there. Is that what you're saying there, Sean? I agree with you if that was the case, by the way. But we do see that there is that large use case for, shall we say, premium harvesting in the equity option space.
I like that, premium harvesting.
It's a more genteel way to put it. You go to the conferences, they say harvesting the risk premium. They don't say degenerate premium sellers. But there's a little bit of that in both out there. But you're right, it's a different use case. You see the commodities, there's a lot of end users hedging, so they're going farther out. A lot different flow going on. People will buy weeklies in the commodities a day or two before they expire to hedge events, which is quite frankly what they were designed for, right? They were not designed as this premium harvesting machine. For some reason, that's what they become in the equity and equity options. But in the commodity space, it's a very different use case, and it always kind of fascinates me, the different use case and indeed the end user of the two, because we're seeing it playing out here again in the Russell 2000 paper. Also lighting it up here, I mentioned that vertical, the 1,500, 1,400 vertical. So it would follow that the 1,400 puts in week 3 are number 2 because they're right behind the 1500 puts in terms of actual volume. Then we jump out a bit here down, looks like to July to the 1400 puts. Again, puts. Out of the money puts are the trade du jour this week out here in the E-mini Russell. The lion's share actually coming up on Thursday. Almost all the paper going up on Thursday out here in these 1400 puts. So interesting to see a lot of perhaps hedging activity, at the very least downside put activity over here in the E-mini Russell 2000 this week. Perhaps not what we expected given a bit of a rally ho, at least towards the latter half of the week. Let's just see really quickly, as we like to do here, Sean. We like to scroll through and see if we can see any, shall we say, esoteric, exotic strikes lighting it up out here as well. And doesn't seem like anything too crazy. I guess 1740 calls is pretty optimistic. A bunch of those trading in DEES 2018 to the tune of that. So if you don't think this is 1600 is not optimistic enough for you, you like the index, about 100, almost 150 handles higher, then that's a level that could attract you. Nick, you already kind of mentioned the skew out there. Anything else catching your eye, maybe from a vol or from a volatility open interest? By the way, open interest, a pretty strong week here this week, Sean, up 13% compared to last week. So things are certainly rocking and rolling. And of that, the lion's share, looks like about a quarter, a little over 26% coming in that week 3 contract. So again, that goes back to what we were saying before. The weeklies are still where the action is out here in all the equities and equity indices. Mr. Nick, anything else catching your eye out here in the Russell land, sir?
No, I was just going to mention that, I was reading something the other day about Apple's rally and how much it contributes to the index. And when you look at it that way, and you really just don't get a broad perspective in a situation like that. Whereas, you look at the Russell, and there are so many pieces to that. One single entity can't really affect it in the same way, which is all the more reason to, sort of point out, I think, what I noticed, which I wasn't expecting to see, is we are almost at our contract highs here. I think our contract highs I'm looking at the rolling front month here over the last year, was about 1613 and change. And we bumped up against 1600, a little over, back in the middle of March. And now, we touched 1605. We went through 1605, or the last is 1605.20. So we are on contract high. So it's sort of like a foundational support and rally, right? So we see the big market is generally still off its highs, whereas this one is really sort of approaching it. So there's sort of a broad market base being established here. So maybe we can expect to see a little bit more. Like, you didn't see a tremendous amount. You saw some fairly distributed volume this week in the Russell. It wasn't blowing the doors off anything from an option standpoint, but generally good open interest with a 13% increase. So you can always appreciate something like that happening, and that's how the OI numbers just sort of grow over time. You get these continual weekly increases, but maybe we're going to start to see a little bit more action on some of these upside strikes, whether it be buyers or sellers, because we are approaching a point where we are reaching highs. So maybe what we just talked about earlier, where people are buying the ATS to start selling some upside calls to take advantage of the fact that decay is going to happen as we move towards expiration. Is also, we're going to run up through the 1600, but maybe not to these higher strikes with a little bit smaller delta. So that would be sort of the first thing I'm looking at that caught my eye. I mean, just in general this week, I'm not sure if it's the same in the E-minis. It's about the same. But in general this week, we saw, the puts definitely got soft in comparison to where they were last week. Now, again, but that's going to be along the same lines that we talk about, where we didn't see a great increase in volatility, but we saw sort of a move along the volatility curve. So, it's nothing spectacularly odd standing out, more of a sliding along the volatility curve. But I think that what caught my eye the most is the fact that we're where we are in terms of contract highs. So look to see what happens in the weeks to come with that, especially, we had a pretty good move this morning and then it kind of backed off, but see if we follow through on that next week.
And Sean, what else are you guys cooking up for us, or what else are you keeping an eye on in particularly in the Russell 2000 space in the coming weeks that we could look forward to here on the show?
Well, every June we reconstitute the index, so we've got that coming. Historically, volatility in the index. The reconstitution doesn't really affect volatility that much. It's a pretty seamless transition in the reconstitution process. But reconstitution in a more volatile market is going to happen. The volatility is higher than it was for the last several years. So that's going to be an interesting thing to watch, this reconstitution. So we're looking forward to that. We, again, don't anticipate an increase in vol because of reconstitution, but there is an increase in vol, and reconstituting during that is going to, as I said, going to be interesting. So we'll talk a lot about reconstitution in the coming weeks because it's not until the third week of June. So
a year ago it was approaching single digits, right? So,
single digits, exactly.
A very different environment than this year where we have the reconstitution. We'll look forward to that. And we like those events. They tend to drive a little bit of interest, a little bit of activity. So we're looking forward to that. Speaking of interest and activity, Sean, and everyone in the mother, it seems like this week, has been talking about Crude. Of course, we were off last week when Crude decides to make a nice run up to and around the 70 handle for the first time in quite some time. So that was, of course, all the news, all the rage in the commodity space, a lot of it last week. And coming into today's show here at the end of the week, we're seeing Crude net on the week finishing up about a handle right around 70 and a half. So for all of you out there who are hoping we would stay above the 70 handle, maybe not people who drive a lot or have those big SUVs, but everybody else out there who was hoping Crude would end up over 70 handle. There you go. You got your wish this week. We're setting out right around 70 and a half here as we're coming up on the latter half of the show here. Interestingly enough, Nick, volatility, kind of a bit of a mixed bag out here. You got the front portion of the curve kind of coming in a little bit while we have latter portion of the curve, vol actually coming up. And that's perhaps not surprising. We're at these levels in WTI vol where it's low enough that you can see these interesting things playing out. In fact, you and I have mentioned before how it's been a good buy for a while, except for a couple of recent spikes where it seemed like maybe it was a bit overdone out there in the volatility, I should say, in the crude volatility space. In terms of actual action this week, open interest up about 5.5% out there in WTI land. So a pretty robust week. All this attention around WTI breaking 70 surely driving a lot of paper over there at the end of the day. And once again, the lion's share actually just slightly over 50% of the action coming in the front contract, the June contract, with about 52%, yes, of the overall volume going up out there. And looking here, again, we're settling out right about 70 and a half here at the end of the week. Number one strike with a bullet where the action was this week was a little bit more optimistic than just that. If 70 and a half is not enough for you, well, then 72 should have you covered, and that's what was lighting it up this week. The 72 calls doing a lot of volume. The lion's share actually coming on Tuesday, about 15,000 and change, 12,000 on Wednesday, 10,000 on Monday. The rest kind of sporadically scattered throughout the week. Pretty light today. Taking a little bit of a break here to wind up the week. Like you mentioned, about 47,000 going up. Only a couple hundred net opening on the week. So clearly this was an action-packed strike pretty much all week long, back and forth. Will we make it? Will we break it? Will we stay above it? Will we get below it? All this kind of stuff. Driving a lot of back and forth here on the 72 strike this week. Followed hot and heavy, right behind it, hot on his heels, by the 65 puts. So if you were worried or specking on or interested in a little bit of downside, you didn't think perhaps this 70 level could hold, a lot of people were in your camp as well. 65 puts doing about 44,000 contracts this week. The lion's share almost half coming on Tuesday. Just a hair under 20,000 going up on Tuesday, 12,000 on Monday. Pretty anemic on Thursday, only 500. So took a break on Thursday, about 1,600 going up today. Again, about 44,000. Of that, about 10%, 4,400 are net opening on the week. So a lot of action, a lot of opening action here on the 65 puts out here. Then we jump off a little bit here to, if that's not far enough out of the money for you, you want to hedge a little bit tighter, a little bit closer to the at the money, well, then they got you covered here. Again, all of this in that front contract with the 67 half puts, doing about close to 35,000 contracts, almost exactly half going up again on Tuesday. So maybe perhaps a bit of a vertical going up to 65, 67 half. We'll have to dig in. Maybe Nick can open up his magical block trading and see if there was indeed a vertical going up there, because it certainly seems like it. Either that or that was just the put day out there in WTI this week. 17,000 and change going up that day, 12,000 on Monday. The rest kind of scattered throughout the week. Again, about almost 4,400 net opening. So again, perhaps the whiff of some verticals or something else going on amongst these two strikes to keep them so much in lockstep. Hop behind it then, kind of splitting the difference here. 68 puts, getting our number 4 spot on the top 5 here with about 33,000 contracts, 12,000 going up on Tuesday. Again, Tuesday was just the day for WTI, seeing a little bit of action out there in the crude, and it's reflecting here in the puts, 12,500 about of the 68 puts going up, and then the rest kind of scattered throughout the week. Net about 3,800, so a lot of opening put activity here this week in WTI. Then rounding out our top 5, go back to the calls one final time to see. Yeah, it's a 75 call. So if 72 didn't do it for you, 75 got you covered to the tune of 27,000 contracts. About 9,000 going up on Monday. That was leading the charge. The rest kind of scattered throughout the week. Only about 1,200 net opening on the week. So a lot of back and forth. Not surprisingly, in that upside call strip as well. Let's just dig out a little bit farther as we are wont to do here. See if we can find any interesting exotic strikes that were lighting it up. 85s doing a decent amount of action out here in the October contract with about 2,200 lighting it up this week. So some perhaps optimistic paper or indeed some overriding paper going up out there as well. Also saw a lot of action in the 75s in DEES 2018, about 12,000 going up there. If that isn't your bag anymore on the downside, we did see about 3,000 and change of the double puts, the 55 puts, going up there in June of next year as well. So a bit of a mixed bag out here, but number 1 with a bullet, definitely the calls, but then a lot of puts lighting it up this week as well. So a lot of back and forth action, perhaps not surprising, Nick, given the fact that we did see so much heat, so much focus on WTI this week. In fact, before we get to that, really quickly, our buddy Blue over there at CME, he wrote a great breakdown of, because they have great reports over there in their economic research. He wrote a whole big breakdown of WTI breaking 70 and kind of what it means for the market. Of course, a lot of this driven by the pullout of the Iran deal. Blue likes to play not just weatherman, he also likes to play politician. So he gets into a lot of political analysis here in his breakdown as well. You can find it again over there, CME Group. Some interesting graphs here as well about the net importing of crude from places like Russia and how U.S. being a net exporter these days. Of course, mentions here in this report as well, the higher spot prices likely to lead to increased production from our friends over there in Russia and Saudi Arabia. And indeed, it's going to help the shale, as you talked about with Blue before, the shale guys becomes more profitable for them as well to keep cranking out oil from the shale. So all that is going to lead eventually to more supply. How that's going to impact these prices remains to be seen. And then, of course, he talks a little bit about backwardation in the market, why the futures are backward, which is, of course, not a surprising event whenever you see some very near-term fluctuations, near-term volatility in the marketplace that people probably don't think is going to be a long-term seismic or structural change. You're going to see the futures in the front portion get a little bit dicier, a little bit more volatile, a little bit juicier, and that's exactly what we're seeing out here in WTI. And he just mentions if it is persistently backward, what does that mean for shale oil? Great breakdowns in here and how this could help these guys, even if it does remain this way for a while. It still could help out with the shale guys. Interesting stuff. I encourage you to check it out over there. The title of the report list, you can just search for that, is called U.S. Pullout of Iran Nuclear Deal. What's next for oil and business? So interesting stuff. A lot of great charts in there as well. I'll have to bring Blue back on again one of these days to break it down for us. That said, Mr. Nick, what's been catching your eye? I know crude's been top of mind for a lot of people. What's been catching your eye out here in crude this week?
Well, I think I go back even a couple of weeks or 3 weeks, maybe 2 weeks probably, when we had Tracy on. We started to talk about whether we thought the move up would continue, and we didn't really see that big of a move. I think back then we might have been 68, 69. We did see a push higher, obviously, over the last week, given everything that was going on. But I think probably the most interesting thing is the fact that when you look at the curves right now, you have a pretty flat vol curve between the 25 delta put and the 25 delta call. So that's going to get us in the July and August, approximately a range of like $67 to $75, which is generally sort of an indifferent range at this point when it comes right down to it, and that's really supported by where we have the largest sets of open interest. So we see in a lot of the contracts we have like you might see 70 strike, but the bigger strikes are going to be 66, 67, and 68 strike, and then the upside you have the 75 call. So I think the market has sort of said, okay, we expect us to trend between these 2 points, whether it's 67 or 68 and 75. If we get through 75, there's not a lot of option resistance above that. So that would be a big point for a move to the upside. And I know that there's been talk of that potentially at some point near the end of the summer. And I think that's where a lot of the foreign producers, I believe they've talked about having $80 a barrel, which is where, especially the Saudi governments, is where they could get the influx of cash back into their economy that has been missing of late. But that's really probably the most appealing thing, is that there's probably some strangle plays out there, 68.75, 68.74, or 67.70, whatever, depending on what month you're looking at. We got an OPEC meeting that's encompassed by the August contract. Don't necessarily know that OPEC is going to have much impact given everything that's happened this past week, the same as it would just sort of in a regular announcement where there wasn't any event volatility leading up to that. But that's probably, for me, the most telling thing of flattening. And that's why in vol was really sort of indifferent this week. You saw it come in the front contract, but that doesn't really count. It's 7 days, 6 days to expiration. Started out with 10, but we have like a real, I wouldn't call it the true smile. We sort of have a flattened center smile with some upturned, edges of your mouth. So sort of like a meh, a MEH face, a meh face. I don't know which way the market's going to go. So I'm going to bounce in between these two futures prices, 67.75. And if we get outside that, then we're going to see some movement in the volatility. And until then, we're definitely supported with the options open interest around those particular strikes.
Look at you talking strangles in W2. I got to imagine that will intrigue a lot of our listeners, Mr. Nick, who are eyeing these markets, I think, with renewed interest now that we're maintaining, at least for the time being, north of this 70 handle. I got a feeling a lot of people are going to be writing in with some interesting stuff on crude. I got a little time. I think we probably should hit on. We talk crude a lot. We talk also sometimes when it's moving the shiny stuff, and it was moving again. This week, hitting multi-week tops here. People who are technical folks out there now saying gold was testing the 100-day moving average right around the 13.25 level. As we're coming into the end of the week here, it settled off that a little bit, right around 13.20 in at least that front contract. 13.25 a little bit farther out there. Still a good week for gold bugs, up about 5 handles or so net on the week. Of course, we see a lot of this driven by the dollar and a bunch of other stuff floating on in this space. Whenever you talk gold, you got to talk macro. It's kind of inescapable. Gold vol also coming in slightly again on the week. And there's not much room for it to go here on the downside. We've been saying for how long now on the show, Nick, that the vol cones are at like 5-year lows or pretty close to it in gold. We've seen a few sparks of life out here in metals vol, but it kind of retreats just as quickly out here. So yeah, it's no sparks of life out here when it comes to metal vols this week. In terms of overall open interest, actually perhaps not as much action as you would think, only up about 3% net growth on the week. I mean, that's just net opening. Doesn't mean there's not a lot of back and forth, just net opening there. In terms of number one, where the action is out here again, in gold, once again, you're talking gold, you got to talk upside and you got to talk calls. That's where all the gold bugs love to be. That's where they love to play. And once again, it's number one with a bullet this week. 10,100 of the 13 half calls. Again, we settling out this week right around 1320 or so. So 30 handle out of the money calls there in effectively the front month there still lighting it up. I said about 10,000, pretty evenly split throughout the week. The lion's share just a little bit under 3,000 going up on Wednesday. Again, the rest kind of split throughout the week. Net about a quarter of that, about 2,500 opening on the week. So a lot of back and forth with some decent opening paper here on upside calls. Again, the gold bugs, they got to have it. They got to have that upside, and they're doing that once again here this week. Then actually we jump out a little bit here for number 2, taking us all the way out, away from the front month, all the way out there to October, into the dark side, to the downside. The 11.5 puts lighting it up this week with about 4,000 going up on Tuesday, and the rest kind of scattered throughout the week. Total of about 6,000 and change. Of that, a lot of that, pretty much all of that opening, 5,500 opening. So a lot of opening downside put paper out here this week, taking on number 2 spot. The gold bugs may not want to hear that. Could be some premium harvesting going on there as well. But looking at this paper, I would probably wager not. Again, about 11.5 puts lighting it up here pretty strongly to take our number 2 spot here in gold this week. Then back to the calls again. Actually, no, back to the puts. It's the 1,300 puts back in the front month, doing a tick under 6,000, about 5,900, going up about 2,200, going up yesterday. The rest kind of scattered throughout the week. Slight bias to closing, so a lot of back and forth. Again, even money strike, a lot of back and forth throughout the week. Not perhaps too surprising there. Then we go down to the 1,290 puts. If that even money isn't your game, 1,290 puts are having the action this week. About 5,000, almost even, going up this week. 2,200 on Wednesday. The rest kind of scattered throughout the week. Not too much going on today. A couple hundred contracts hitting the tape today. And net about 400 opening there as well. And then rounding out, let's see, our top 5. Just looking again really quickly. It looks like it is indeed 1340. So 13 halves was too rich for your blood, too far out of the money for your blood. Then the 1340s were where the action was, to the tune of about 4,500. The lion's share going up on Wednesday again, 1,700 going up here through for about 1,400 going up on Thursday. Net about 400 opening on the week. Mr. Nick, before we do that really quickly, let me just do our scan as we are wont to do. We got some fun ones this week, Mr. Nick, including, again, the gold bugs out in force all the way out to Dees 2019, where we saw 1,200 of the 2,100 calls. The Dees 2019 2,100 calls. So we're at about 1,320 right now. 13.5 wasn't optimistic enough for you. 2,100, Sean. I can see by your face. You're intrigued by that one. 600 on Thursday, 600 again today. Total of 1,200. Also worth noting, 1,000 of the 2,300s. Looks like maybe a bit of a fly here. 1,000 of the 2,300s and 500 of the 2,600s in Dees 2019 going up here. Mr. Nick, is this one on your radar as well? I'm guessing that it is. Is this look like a fly going up here to you as well? And aside from that, what else caught your eye out here in gold this week?
Yeah, I didn't check specifically the blocks to see if it was out there, but I think what's interesting about gold is, first off, we see the absolute volatility levels are very low. But when you take a look at the futures chart, and I'm looking at June, my rolling front contract is not coming up right now. So, here it is. Good. So that's why, because that was an intraday. So we are pretty much where we were at the beginning of the year from a price standpoint. But when you take a look at this chart, we had dips from just in Jan, Feb, we had 1310 up to 1362, back down to 1315, back up to 1355, back down to 1302, up to 1330, back down to 1315, back up to 1355. I think you get my drift there. It just seems this low vol implies high gamma with a pretty solid $40 range means that you don't necessarily need high volatility numbers to have plays in the market here for creating some value. So like we always say, here we are again. We're not exactly at the bottom. It would have been, more probably. I really wasn't paying too much attention when gold hit 1302 again. But when you look, 1302, vol's getting hammered. Buy vol, you're at the bottom of the range. The bias has been toward the upside. buy puts, buy futures. You have a built-in margin benefit, and you also have a built-in buffer to the futures you want to scalp. So even at this level, 1320, if we have another move up, a little bit of scare, we see that we have up to 1362 potentially. So here we got a range, 1300 to 1360, a low vol environment, pretty good range to scalp gamma on some long volatility, or not long volatility, long cheap volatility gamma plays.
Now, speaking of scalping gamma, Mr. Nick here, people would wish they had some options in crypto right now, because there's some gamma to be scalped, hopefully long gamma if you're out there these days in crypto, because, yeah, we're looking at the numbers right now. The CME Bitcoin futures off nearly 500 handles right now as we're speaking, Mr. Nick, 8,600 going up right now. So these things rocking and rolling. Nearly 5,000 contracts on the tape. Remember, listeners, this is a 5x multiple contract here, so that's about 25,000 coins changing hands. So a big day out here in crypto. I'm not sure what's weighing on the crypto space, but still a lot of action. More interesting, on our last show, we can get a chance to mention as well, there was a record going up over there at CME a few weeks ago on Wednesday when they put up 11,000 contracts, which is, of course, equivalent to about 56,000 Bitcoin going up. That was their record then. So they're putting up a lot of numbers here in the Bitcoin. So it looks like interesting stuff. I don't know, Mr. Sean, I won't put you on about it. Maybe we can get some cool stuff coming from Russell down the road for crypto. That would be kind of nice. I'm sure our listeners would be responsive to that. Speaking of our listeners, we can spend some time here in crypto, but I want to get some of them on as well. So I think without further ado, let's keep on rolling right on into our futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions at theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live every Friday at 3 p.m. Central via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to the Futures Options Feedback. This is your segment, the portion of the show where you guys take the reins, questions, comments, insights. You know how to find us, social media, at Options, most of the major platforms. Hit us up on the website, questions at theoptionsinsider.com, or carrier pigeon. That works too, as long as you can get it to the studio here. We'll read it off for you. Like our friends here, like Patrick Snoke chiming off first. I like this, Nick. He says, the only place that hashtag Hoglove is seriously discussed is the Options Twifo show and some underground blogs for lonely farmers, each for different reasons. So, Nick, he's picking up on our hashtag Hoglove hashtag. We've been kind of putting it out there. I don't know, Sean, you haven't been on the show in a while, but we do some dives into the livestock every now and then. And when we do that, I like to put out the hashtag Hoglove because it's funny. And people seem to clearly be grabbing on to this one out there. So, Patrick, I'm with you. I wish more people would get on board the hashtag Hoglove train. We'd have a happier, a more fun world here. Here's a question for you. It's right up your alley, Sean, actually. This comes from Harry H. He says, very simply, can I buy options on the Russell VIX RVX? My broker doesn't seem to offer them. You know, I'm glad actually you sent this email in because I was meaning to talk about this and I got sidetracked with all the other stuff we had to talk about on the show today. But RVX, one of my favorite of the products you guys have had out there for a while. I remember when your predecessor, Pat Fay, used to come on our volatility show. He and I used to talk at length about what was going on out there in RVX. RVX, if you're not familiar, listeners, of course, is the Russell 2000 VIX, effectively. So all the things you know about VIX on the S&P, guess what? It's also on the Russell as well. And it gets nice and interesting when things start to get a little bit disassociated from each other out there, which is kind of fascinating. But I know he was working to build an options ecosystem out there. I know you're kind of working to do the same thing out there. So maybe catch our friend Harry H up on, first off, A, if he can buy these things, and then B, what you're working over there at Russell, what your team is really doing to try to get the RVX ball rolling again.
We're still working on growing the volume and open interest in the underlying, the RVX itself. So our focus is there. We're still getting the word out. We're talking to lots of volatility traders, the entire volatility trading community, about RVX. It's still early days for RVX, but we are very bullish on the product.
Yeah, it's one that makes a heck of a lot of sense. We've said it before. They're structurally more volatile, the Russell 2000, than the S&P. So a volatility product on that should be a home run, should it not? And so, yeah, we're looking forward. I know there used to be options, correct? And just to clarify for Harry H., there are no options currently?
Yeah, correct, there are not.
So, Harry, you're not seeing things. There are no options on RVH, but Sean and his team are working diligently, and hopefully maybe one of these days soon on the show, we'll be able to report that RVX is trading it up, because that's a fascinating one. And I know for a long, I think it's an education process with a lot of the market makers and out there too about what this product is, what it can bring to the table, what they can do for it. But once they get behind it, I'm sure you guys will see it as well, Sean. I think it's a product that we're just talking about it a lot on our previous show, Volatility Views. There is an appetite for alternatives in the volatility space, particularly right now. So it sounds like you guys are in a good position on this one.
Absolutely, and there's a trade there with VIX versus RVX. So definitely take a look at that.
Yeah, that used to be the big driver. Whenever Pat would come on talking about some big blocks, he would see it was usually when there was again this disparity, this disassociation between Russell Vol and the S&P, aka VIX and RVX, and that's where we'd see a lot of paper driving the two back and forth. So keep an eye on the product. You can certainly trade the underlying. Can't do the options right now, Mr. Harry H. But yes, hopefully someday soon you'll be able to trade the options again. In the meantime, you can't trade the underlying. It's there. So hopefully your broker recorded it. If not, tell your broker they should be listening to this thing. What's wrong with them? All right. Mr. Nick, here's a good one for you. This comes from Jam. I like that handle, Jam. He says, I'm missing my TWIFO fix. Well, hopefully we got you covered this week. We only offer 1 week, and you got a best of, folks. It wasn't like you missed a ton. They're demanding, Sean. They want shows all day long, every day. So here you go. You got your fix here, Mr. or Mrs. Jam. He goes on to say, how's the WTI rally playing out in the option skew? Well, we kind of touched on that a little bit, Nick. If you have more to add, you can. He also has a question for you. He says, also, did Nick ever put out those straddle reports? I think he's referring to those 45-day straddles that a listener, I think it was Mark Brandt, was requesting. I think that's where he's referring to, Nick. And so if so, A, did you put those out? And then B, I believe you did. Anything else to add on WTI skew?
I think we covered the WTI skew pretty well. It's just something to keep an eye on as we, move into the summer here. It's in a pretty comfortable spot, I think, that 70 handle right now. So until we get outside a certain strike range, we're probably going to just be bouncing around in the belly of that vol curve. As far as the reports, specifically the 45-day report is not out there yet, but Mark was able to garner the information he needed from some of the quick vol reports that we have out there that rank things according to Delta. So that stuff is out there. That's unfortunately only in the subscription version of things, but there are a lot of ways to see rich and cheapness in the skew and near the money without formally having the at the money report out there. It's in the queue to be officially released, but that will be released as part of the quick vol reports section. So there's always multiple ways to skin a cat within Quick Strike. You just have to be able to have a little bit of time and spend a little bit of time learning the different pieces that are available.
There you go. Get familiar with the platform. Hey, you can do it yourself with some synthetics. A little bit of work, but you can do that yourself as well. The data's there. You just got to do the heavy lifting sometimes on your own there. Let's see. We got time for one more. Let's go to this one. Look at you, Sean. You're on the show one day and you get all these questions here for you. He says, this comes from Chi-Town Rick. I like that handle too. Is CME adding more than just the E-mini Russell 2000? Will there be a big contract or more indexes? Well, Sean, as you kind of alluded to earlier, so you coming up on the 1-year anniversary of you guys kind of migrating back to Globex and to CME. We talked primarily today about the E-mini Russell 2000, but what else you guys have in your bag of tricks for Chi-Town Rick and everybody else over there to look forward to?
Well, here's a great plug for CME Group. If Chi-Town Rick just goes to cmegroup.com and takes a look, there's a family of Russell products there. There's the Russell 1, the Russell 2, Russell 1 Value, Russell 1 Growth, Russell 2 Value, Russell 2 Growth. So there's a suite of, and there's options on the Russell product as well. Bigger contract, I mean, it's $80,000 notional, I think, is a pretty big size contract. And volume and open interest is growing. CME is all about client demand. So if there's more product out there, reach out to who at CME Group who you work with, or you can always contact me. Happy to pass on your information to the CME in terms of product. We are all about fulfilling needs for the client. So happy to do it.
All right, everybody. That music means we've come to the end of another epic sojourn through the world of all things futures options. By the way, Sean, our audience, they like us to do the work for them. They're like, why should I go to the CME website? I can have these guys tell me. They love to do that. By the way, you can do that, listeners. I just did it right now. Just go to the CME site, type in Russell or FTSE Russell. You get all the contracts that Sean alluded to and much more. And Sean, like I said, I'm glad you could join us here for the first of what will be many appearances down the road. I know we got to run really quick, so before you head out, what we touched on a lot already. Anything else you want to leave us with? Hints, teases, what's coming down the pike from you guys at FTSE Russell in the near future?
As I said, look for more asset classes. Look for some fixed income stuff. We've got reconstitution hitting us in June. We're very excited about that, and a little bit more of a volatile time. So that's going to be interesting. We got the 1-year anniversary of the transition to CME with the suite of Russell products. Very exciting. So there'll be some bells and whistles around that in the coming weeks.
There you go. I think maybe we'll glom on to that anniversary because we already missed our own, Sean. That's what we do here. We miss our own anniversaries, so we crash someone else's. Maybe we'll do something like that. And Mr. Nick, you guys always have cool stuff coming down the pike over there in the land of Quick Strike. You mentioned the straddle reports, the other cool stuff you guys are working on. Sometimes by user request, ask and you shall receive. Sometimes, listeners, if it's a reasonable request. But that said, what do you guys have up your sleeves these days over there at Quick Strike, sir?
Oh boy. Well, you got to keep looking. There'll be new tools released on the free version, and we've addressed the new SOFR contracts out in the short-term interest rate, so that all will be incorporated out there this weekend. So you'll be able to plot the new short-term rate versus the Eurodollars in the Fed funds and see how those have trended over the last year and a half or so when those rates were getting reported, and just keep listening, right? Because we're going to have some other specific tools that are coming out. Can't really announce them at this point, but there are going to be some fun ones that I think people are going to enjoy quite a bit. Some of them are independently released by us, and some of them are going to be jointly released and only available as part of CME Group website. So keep your ears open.
There you go. Keep your ears open. Head on over. While you're doing that, head on over. Bantix.com, BANTIX.com. You too can find out what's going on over there in the land of Quick Strike. While you're at it, of course, head on over. CME Group, you can find .com. You can find Blues Reports. You can find all those Russell products and a whole lot more over there. CMEgroup.com/TWIFO will also get you the TWIFO reports. And on behalf of Nick and Sean and our friends at CME, and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing. And we'll see you next time for more of This Week in Futures Options.
This Week in Futures Options is brought to you by Quick Strike, options pricing and analysis software. Quick Strike offers powerful and flexible options analysis and pricing tools via an easy-to-use web-based interface. View prices on outright options or spreads with comprehensive page-level analysis controls. Build trades, manage risk, or explore historical volatility. Quick Strike has you covered, with market data reports ranging from open interest to the term structure of volatility. Quick Strike is the perfect addition to your trading toolkit. Learn more about Quick Strike at Bantix.com. That's BANTIX.com. And don't forget to follow us on Twitter at QuickStrike1. That's QUIKSTRIKE1. This Week in Futures Options is also brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.